Hello traders, and welcome to lesson number 10 in the ReadFX Beginners Forex course. In this lesson then, we're going to look at order types. There are two main types of orders. We have market orders and pending orders. Market orders then are filled immediately at the best price available at the moment you press buy or sell. Now the price that you actually buy or sell at, which is called the fill price, can be different from the price that you saw on the screen when you entered the trade. Here we have a picture of the buy and sell buttons from TradingView, and you can see that it's in market mode. So the prices displayed are the best available prices in the market right now. So if you decide to buy, you hope to get this price, but you may not actually get it. And the same applies for the sell. And that's because the market's always moving. And in the time that it takes for your order to be processed, this price may have changed slightly. So let's have a look at that process. Now, I've simplified this enormously. What really happens is quite a bit more complex than what you see on the screen. But basically, this is you press buy or sell. So let's say you do a buy trade, you press buy, that order goes to your broker, who then passes it on to the bank, which is a LP, a liquidity provider. Now, they actually fill the order, or they execute the order essentially. And then that's sent back to the broker, who then passes it back to you. And then you find out the price that you actually bought at. Now, let's look at an example. Let's use me, for example. I live in the UK, my broker is in Australia, and the bank is in the US. So my order, when I click buy, has to go from the UK to Australia, to the US, back to Australia, back to the UK. And during that time, the market may have moved. Now, this happens all of the time. In fact, the price never stops moving. And on most orders, you get a little bit of slippage, but it's so small, you don't even notice it. In volatile market conditions, however, the slippage is noticeable. So if the market is moving very, very quickly due to news or something like that, and you press buy or sell then, this few milliseconds that it takes for this to travel halfway around the world and back to you can actually lead to a significant price difference in your order. So be aware of that. Pending orders. So pending orders then are a special type of order that sit in the market and wait for price to reach them before they put you into a trade. Now there's two main types of pending order. The first are stop orders, sometimes called on-stop orders, and the second are limit orders. Now let's have a look at the journey that they go on. Again, I've oversimplified this. This isn't what really happens. Let's imagine then that you set a buy stop. Okay, so that is a pending order. Instead of it just going straight to the broker and then off to the bank, what happens is, because it's pending, you set this order and it sits on your broker's server. Okay, so it's sitting in the market. The reason there's a picture of a little clock is because pending orders tend to have an expiry or a condition attached to them. For example, you can say you want to set a time limit on your order of 1 day. So if price does not reach your order within 1 day, then it expires. And if it expires, it's just returned to you and you'll see that the order was not filled. So this is scenario 1. You set an order, price doesn't reach it before it expires, and then it's returned. Scenario 2 is that you set an order, it goes to your broker, and before the time limit that you set, price does reach it. Now this time, when price reaches your order, your broker will forward it to the bank as before, the order is then filled and it eventually is returned to you, and you find out the price that you actually got in at. So this is the process that pending orders follow. Now let's go to the charts and have a look at what pending orders are and how they work. Okay, so here we are in TradingView, and what I'm going to do now is just press on this little trade button and we get our controls to enter trades. Let me get rid of that for a second. And you can see that we are currently on the market tab. So that means if I press this button now, we are going to enter a trade at market, which means right away. Let me just press on paper trading. Paper trading, if you don't know what that is, it just means trading with pretend money. And this is just going to allow me to put some trades on now to demonstrate how things work. So if I press sell, you'll see that straight away we get a sell trade open, and that was opened at market, which means the best available price right now. It didn't wait for price to get to a specific level, it just put me in a trade straight away. And that's pretty much what a market order is. It doesn't matter if you want to do a buy or a sell, the same exact thing happens, it just puts you in a trade immediately. Now then, let's have a look at some pending orders. We'll just close this down. Now you can see that we have our limit and stop, and we're going to first have a look at a stop order. So we click on the stop tab, and what we need to do now is enter a price. But before I do that, I'm just going to show you why we have stop and limit orders. It's for trading various different strategies. You'll notice on the chart I have two lines drawn, okay, one above and one below. In another lesson we're going to look at things like support and resistance, and you'll understand then why we need these order types. Okay, a stop order then, what you're looking for is what's called a continuation. You want price to continue in the same direction. So currently price is going down, and if you think price is going to continue down, then you would sell to make a profit. But maybe you want a particular level to break before you go into a sell trade. So let's have a look at that. So we can see here we've got some lows that line up. Now if I just press Alt-H, we've drawn a nice little horizontal line, and maybe we don't want to enter a sell trade until this level has broken. So what we could do is we could use a pending order. We could use a sell stop. Now the price here is 33,114. So if I just go to this box and type 33,114 like that, and this is a sell trade, and then press the sell button. So what it's done now is it's set a sell stop. So what we are hoping for is that price is going to drop down, hit this level and put us in a trade, and then it's going to continue through it. Okay, so it's going to continue down and make us a profit. So this is a continuation trade, and that's what stop orders are used for. A buy would be exactly the same. So if we do a buy example, just get rid of this as well. Now this is a high, this is what's called a swing high, and we'll learn about these in another lesson. But let's say you want this swing high to break, so you want price to come up. Arrow's not working. So you want price to come up to this level and then break through it, and that's what you want to make a profit. So let's have a look at that then. Let's get this price. The price of this high is roughly 33,219. So if we go on buy and we'll put 33,219 and we'll press buy. So now we have a buy stop. So now in order for us to make a profit, price has to come up, reach this level to put us in the trade, and then continue through it to make us a profit. So this is how you use stop orders. One thing I want to point out, get rid of this, you'll see down here it says time in force. Now if I click on this, you get some options, okay? Basically you can have an order with expiry or without an expiry, and what that means is, so it's currently set to 1 week. So if I set an order, if price does not reach that level of the order within a week, it will just cancel, okay? So that's the order expiry. Let's have a look at limit orders now, and so we switch to the limit tab, and we're going to use the two lines on the chart here as an example. Now with a limit order, what you're essentially looking for is a reversal, okay? So you no longer want price to just reach the level and then break through it to make you a profit. You want it to reach the line and then bounce from it, okay? So this is how limit orders work. You're looking for a bounce of an area or a level essentially. Now a sell limit is placed above the current price. So the current price is here. A sell limit would be above, because remember price is going to come up, hit this level and bounce from it to make us a profit. A buy limit then is going to be set below. You would expect price to fall down, reach the level and put you in a trade, and then bounce up from it. So let's have a look at that. Let's set a buy limit first then, as we're already on the buy tab, and we can see that this price is 33,000. It's right on the round number. So we're going to set 33,000 and buy, and there's our buy limit. So we now want price to drop down from where it currently is, reach our level, and then bounce up and make us a nice profit. A sell limit then, as I'm sure you've guessed, is exactly the same. So if we set it at 33,250 and we press sell, so now we have our sell limit, and this one we want price to come up from where it currently is, reach our level, and then bounce down to make us a nice profit. And that's how you use buy and sell limit orders. In this video then, we've looked at market orders and pending orders. In the next lesson, we're going to look at technical and fundamental analysis.